As a price action trader, you first need to analyze the left side of your chart before you start trading your current session. You need to, get the feel of what the today's bias is. And when I came in, I saw this downtrend working lower with the break and a new low. That's the rule of the trend lines. After a break of a trend line, there is a retest of a new extreme. And what caught my attention was this double bottom. This support has proven now that it's in play, but the market is still a little bit in a downtrend. You can see the lower highs we are constantly making here and here. So it's not yet ready for a reversal. You need more. You don't want to just pick bottoms just for sake of it. You want to still wait for a little bit more proof. And when I came in around here for 1435, and the prices are working sideways in this little trading range. And first trade I saw today was this short, because we have made the double top. You don't want to go short on this bar. This bar is really big, and at this point, you have a double top, but it still kind of feels like picking a top. So if you want to wait for a more higher probability setup, taking a lower high will always get you better results. You always want to wait for lower highs or higher lows if you're buying from the lows, because if you're just buying the first bounces, that's not that high of a probability. But if you wait for lower highs and higher lows, you're gonna be much more successful. So this was a first good trade. You can see you got a break and a new high. You have to draw these short-term trend lines. So you got a break, new low, working high. You got a break, new high. Okay, you have a double top and a lower high. This was a good trade. This was the trade that I attempted to take today. We have a new high here, pull back. You got a first attempt by bulls to go higher. They're going long into the resistance, wrong move. They don't know how to read price action. Pull back under the EMA, and a second attempt by the bulls to go higher, and it failed on them. I put my limit order probably on the one tick back or at the close, and unfortunately I got left behind on this trade. But this was a good trade because it's still inside of a trend line. It is a failed second entry long, and you can see that it's under the EMA. But I just want to point out one little thing, because the market was very volatile today. You can see that the morning session is still pretty big, and the bar, if I say just approximately 33.21 to close 33.16 and some change. So let's say this is a 4-point bar. If you enter this bar, your stop loss, you're risking 4 points, and it just shows that you really have to scalp for more than 4 ticks. It's very common. A lot of traders, they teach you need to scalp for 1 point, but I think it's a little bit outdated. Maybe 10-15 years ago, when S&P, the volatility wasn't as high, but with the markets today, this bar doesn't even look that big. Look at this, guys. This is not a big of a bar. This is just kind of average bar, and this is 4 points. You can be 4-1, 4 winners, and you have 1 loser, and you get it all back. And trust me, there is nothing more frustrating than being right 85% of the time and then giving it all back on just one single trade. So I found my sweet spot, and this is what I teach my clients, that you have to go for 10 ticks. 10 ticks, in my opinion, 2.5 points, 2 or 2.5 points is the sweet spot in this particular market. So just something to consider if you are struggling with 1 point scalp, or maybe you're doing good with one point scalp. In that case, you're probably not watching my videos because your success rate is 90%. But nevertheless, this was a failed second entry long according to rules. There's a breakout pullback short, but you're going short at this support, so that's a no-no. And now this is a big part of the day. This is a really clear bottoming pattern. You just now made a triple bottom. Prices really are struggling to break below this resistance, and the way prices move, this is a sign of a reversal pattern. Reversal pattern starts with prices shooting up higher through the EMA and then pull back on the EMA, and the EMA serves as a stepping point, kind of like when you step on the stairs. So EMA serves as a stepping point. So this is a sign of a reversal pattern. The thing is, this was the only first entry short, because you didn't break lower on any of these bars. You just make one big move higher, and first break was below this bearish bar. So this is the first entry by the bears. So unfortunately you don't get a failed second entry. This is how you want to trade reversals. You want to see shot through EMA and 2 attempts by the bears to go lower. So unfortunately there was no trade. And you have to draw this trend line if you want to, be on the right side of the market. There is no setup here. You're just bouncing on the trend line. This is a first entry. I don't like taking first entries. They are way too low risk entries. I like to take more higher probability ones. And this was the second trade. Actually, this was the first trade I took, second attempt. You overshoot. So the overshoot of a trend line is generally a sign that the break of the trend line is going to happen soon. So we have a kind of like first entry, pull back, second entry. These are 2 clear legs to the EMA. And notice, you have a break of this trend line. So this is one, rule. You now have this double bottom, almost triple bottom. So this is the second, rule. You're bouncing off the EMA, and it's the second entry long. So you have 4, rules of the strategy that are telling you to go long here. This is a very high probability trade. And this was good enough for scalp easy. You could have scalped out, I think 10 ticks. I scalped out like around here. So it was a good trade. And then the way we shut down higher like this, I actually took this trade and I got trapped here. I was kind of, being overly greedy here because we didn't make a new high. I don't know what I was thinking. Obviously I wasn't, but I really, because price action rules work. You can see that you cannot outsmart the market. You still are waiting for a new high, just as it happened here. But this move, the way we shot through EMA, I thought we were just gonna get even enough for a scalp. And and it didn't happen. Nothing in price action is 100%. So I just got stopped out, and I was 1 for 1. So I was break even at this point, which I was still fine with. I was just trading for a very short time. And unfortunately, I don't think you want to go long anywhere near here. So we just have to see the market working higher. And you're working lower, you got a break of this trend line, new low. You now retest the resistance. You can see a double top, and you can see a lower high, almost a triple top. So at this point, this is starting to look very training range. You can see that this is a beginning of a training range. There is some key level here and key level here forming. So this was a good short to take. This was a lower high from this point, and now you can see that 3 attempts by the bulls to take this market higher, and it's not working. Plus you have already break of this trend line and a new high of this trend line and a new high. But still, this current trend line is very bullish. This trend is really big, so I was still looking for longs from these lows. And this was the trade that I took. You just now made bottom here. It is from this support, so you have to pay attention to the support. Now it's clearly it is a range. Once you're working higher like this, this is you working back and forth. This is clearly a sign of a range day. And this was a triple bottom from this one bottom, double bottom, triple bottom. It is a first entry and a second entry long. This is a lower high. It's lower than this high. So you work out, this is a first entry long, pull back, second entry long from the lows in the trading range, just like you want to take. And you break a little bit higher, you pull back into the trading range a little bit, and you got a second entry long here. And this was my last trade for the day that I took, so I was 3-1 for the day. Kind of, I was already, I didn't want to take more trades because it's Friday, and you don't want to give your money back, but this was a good trade. The EMA is still holding. You are coming from the lows. You're probably expecting market to go to these highs, and it is a breakout pullback, second entry kind of type. So you don't want to go long on the first entry, because what will usually happen, market once it breaks it will usually go back. You know, most breakouts fail. I always tell you, it will usually go back to the trading range. But once you get the second entry here in an uptrend, kind of looking like this was a good entry. And this was a final attempt by the bulls to take market higher, and this resistance was, you know, holding strong. So, you know, if you didn't get long here, you don't want to go long now. This is just the first entry. You don't want to go long here. But at this point, you know, the way we shut down through EMA, it's pretty clear that you're now working much lower. You know, in the trading range, you always want to buy the lows and sell the highs. And then you have a first entry short, pullback, second entry short, two-legged pullback to the EMA. You're now waiting for a break of a new low of this trend line working lower, and it's off the EMA. It's a second entry. So you got 3 points of the rules of the strategy to go short here. This was a good trade. And prices just shut down lower, you know. Prices reversed here. If you're wondering why it happened, you know, I guarantee you it had something to do with, if you measure this trading range and you put it a little bit lower, you can see that you can find a new key level here. You know, I don't want to get the chart too cluttered, and I don't like the measured move that much, but measured moves are real, just something to pay attention to. And that was it for the day. Just gonna put a little bit bigger picture. This is what it will look like in the bigger picture. This is a bottoming pattern at this support. And yeah, just remember, you don't want to outsmart the market just like I tried here. You still want to wait for a new high of this big trend line working higher. And just be careful trading those trading ranges. You know, they might trip you up a little bit, but if you stick to price action rules, you know, you're gonna be fine most of the time. So I'm gonna wrap it up for today. It's Friday. I'm a little bit more tired, excuse me, Fridays. But at the end of the weekend is always kind of tiring. So yeah, I'm gonna wrap it up. Hopefully you had a great trading weekend. Yeah, and trading week. And I wish you, you know, rest of the weekend. So bye.